Good morning. It's Tuesday, June 25th, about 6 a.m. Central Time. Overnight, the precious metals are slightly higher after yesterday's mixed session. Yesterday, we saw San Francisco Fed President Mary Daly warn that the U.S. labor market is nearing an inflection point, where further slowing could mean higher unemployment. That's why we track the initial claims data over the past 5 weeks very closely. For new followers, this comes out on Thursdays at 7:30 a.m. Central Time. That type of rhetoric out of Mary Daly really put a bit of pressure on the dollar index, also took yields a bit lower. The gold market was really the strength and the leader of the precious metals. Now, we did see platinum and palladium also take off yesterday. They are giving back some of their gains. I would suspect that that's profit taking. Now, if you look at the precious metals, gold and silver, they are also off their highest levels. As you have Michelle Bowman, she's another Fed speaker talking right now, kind of saying that if they don't make progress on the inflation, that they may have to raise rates. It's not out of the question, things like that, which I think is just a bunch of hawkish rhetoric to balance out the other Fed speakers from yesterday. Now, shifting gears, I did see a lot of year-end price objectives, and the reason for this is because as the second quarter ends, analysts are going to have to revise their year-end targets. They'll come up with 12-month targets and also 18-month targets. So they're already looking at December 2025 price objectives. Now, recently I saw Goldman Sachs. They raised their year-end price target on the gold market to 2,700. Now, Bank of America is the latest one to release the data. They came out yesterday. They assumed that gold could hit about 3,000, and they kind of gave a range. It was a 12 to 18-month range. They cited that it'll take ETF inflows, which we all know that. We like to see that the rotation of assets occur where they really start to go into things like the SLV, the GLD, they start chasing the options, etc. And that's what really propels some of these prices higher. It kind of gets that YOLO feel coming back. They also cited that China and other central banks need to come and they need to reignite their purchases. Remember, China just kind of took a pause at the moment. We think China will be back buying gold again, but it's really going to take a little bit of strength in their economy. I think that they just kind of downshifted and they looked at, hey, their economy isn't really taking off. The property sector is having its issues, things like that. The consumer's a bit strapped. Weak retail sales data out of China really kind of pumped the brakes on that central bank buying, and they're focused on reigniting the economy. That's why I think copper could be undervalued at these types of areas. Also, one other note is that they want to see some de-dollarization by central banks. And we've seen this kind of trend recently where central banks, they hold a basket of assets, a basket of foreign currencies, and what they're starting to do is break down who are their key trading partners, what currencies are overvalued, what currencies don't necessarily align with their political objectives, and they've been selling those off. So if you start to see de-dollarization, and you start to see that kind of sell off there, it could put some weakness on the dollar index as more dollars are out there floating around. So they also stated that they need multiple central bank cuts here from the U.S. Federal Reserve. So those are some things in order to get that $3,000. So consider it a laundry list of items here. You're going to the grocery store, you want to check some of these boxes off here. So perhaps once we get that first interest rate cut in September, the trend starts here and we check that box off. Now, something else to note, as we do come to the end of the second quarter, seasonal weakness tends to kind of fade away, especially in the silver market. If you do follow seasonals, if you're going to pay attention to this information, you will want to note that there's an additional disclaimer at the end of this video. People don't like to discuss seasonals because it tends to take some of the, the fallacy of the risks involved and things like that, kind of puts them on the back burner. The reality is that seasonal weakness, seasonal tendencies, they could just go out the window in any second, especially in agricultural markets. You get heat waves, you get flash floods, things like that. These objectives, these 12 out of 15, 15 out of 15 years, something has worked, could go completely kaput. But if you do look at silver seasonally during the month of June has seen weakness about 12 out of the last 15 years. It looks, based upon where the price flow is right now, if we don't get a dramatic change by the end of the month, that it's going to be now 13 out of 15 years. We'll see consistent weakness over the month of June in the silver market. So that track record's been consistent. For some reason, silver underperforms in Junes. Perhaps it is miners coming out and they are selling forward futures contracts against some of the delivery, against some of the forward production that they have. Now, on the other hand, July has been a positive month for copper, gold, the Dow, and the S&P, and also the NASDAQ. If you want some of those details, if you are a client of Blue Line Futures, I'll be more than happy to send them over to you. We do have subscriptions. We do have partnerships with more research, My Season Algo, things like that, that we could get you over some of this information. Now, looking at the technicals on the gold market, support still 2,300. The first resistance is going to be 2,369. I think that's a big level. The 2,369, kind of the top end of the range on the charts over the past few weeks, and then we've seen some breakdown from there. We really want to close over that 50-day moving average. It should reignite the bulls. We need to get a close over 2,392, and that'll start to pump out that new all-time highs and really get some of these analysts really hyped up over their price objectives they have. Silver been a bit more firmer than the gold market here, although some of the movements have been quite dramatic. Of course, the average true range significantly higher, sitting at about $1.08 on that silver market right now. The support 29.30, your critical support 28.28. You don't want to see a close below there, although I think from a long-term aspect, I think that a price below that level and anything really below 29 on the December contract, I think gives you some long-term value. It's going to take a close over 31.19 in order to attract a new wave of buyers and YOLO buyers. So, excuse me. Looking at the long term, the Silver Institute, they did release their 2023 figures, and they said that there was a deficit on the silver of 142 million ounces. In 2024, they're forecasting 263 million ounces. That is the second largest deficit since 2010. On the demand side, they saw in 2023 a 20% jump in the industrial demand at 445 million ounces. In 2024, they expect 485.6 million ounces as far as a deficit, citing electrical and electrical industries. Remember, they've got to pump up this grid here, especially with EV, things like this. This is a trend that we should really have seen and been preparing for, and silver may be playing some catch up here. So Chinese industrial demand that also jumped up 44%, particularly due to solar panel production. That's why I said I'm going to watch the debate and see what Trump's stance is on China. He was very hard in his last election. We'll see what happens there. Does it impact any of this demand and things like that? For clients that are working with us, we are going to look at longer term option spreads again. We're looking at buying something in the October contract around 20 cents on silver with an objective of $1. It's going to be a multiple dollar wide spread, but remember, we're just trying to build equity here on some of these trades. So reach out to me specifically for some more details. Now, if you got any questions, give me a call. A little bit longer video, but I wanted to get this out here for you guys. So 312-858-7303. That's my number. Remember, futures option trading does involve risk loss, may not be suitable to all investors. Good luck, good trading.